Hey everyone, this is a trader investor and I'm going to take a look at AMC today because of price action. Right, today we had a significant down day. I mean 6.5%, it's no joke. It even was lower than that at one point. But why are we seeing this kind of move? Go down, go up, go down, go up. Why are we seeing this? I think there's a lot of tug of war going on, and the tug of war is not between hedge funds and retailers. Based on what I'm seeing, I think it's the hedge funds are pinning us against each other, and it's retailer versus retailer. Because when price ran up at the beginning of June 2nd, price really ran up, and then the very next day it collapsed. I feel people got scared. I really think people got scared, and so when it reverses, some sold. As it was going down, some sold. The idea was to hold for this real squeeze to take place, but this was not the real squeeze. Yes, you've made some money if you had bought in the tens or the teens and so on below the 20s and run it up here, but the real money to be made is when the squeeze happens, when the short squeeze really takes effect. So if price kept going down and then up, going down and then up, that means retailers are fighting against each other. And when there's a shortage of supply, this is when price will drive up drastically. When there's shortage of demand is when price drives down drastically. When the two are kind of balanced, what you see is a price action that stays in a range. This is a good consolidation. So my wish, I have even marked it here as a wish area. Right? This is not reality, this is not technical, this is not fundamental. I'm just wishing price will give us an entry near this area here somewhere. That's my wish. As an entry, not for stock entry, I already have enough stocks, but for explosive options positions and to load up, not just to buy 5, 10 contracts, to buy 50, 100, 200 contracts, right? If it gives us a significant down gap before the squeeze happens. Keep in mind, if the squeeze happens and price collapses, don't load up. Then it's too late, game over, right? So we want price to come down before the squeeze and then shoot up to the moon. This is what we want. Of course, there's some people who do not want to be scared, so they don't want this move. Even though it's a great opportunity, they don't want this move. What they want is the explosion to begin right here. Because trading out of fear. Yes, some of us sold positions out of fear, but instead of trading out of fear, if you're holding, if you're HODLer, and you want this to go to the moon, you don't want price to come down, you want it to start shooting up from here. But if you can start accumulating cash, preparing for the event that price comes down here and gives you an entry, load up on options, even load up on more stocks, you can go take it this way. This is what I'm saying. I'm okay with this because I have stocks already in play. I have some options already in play. I'm okay with this. I prefer this because I really want to increase my position. Significantly increase my position while not significantly increasing the cash that I put in it. So that's the big part of the equation that I'm dealing with. So AMC today, down day. We've seen those down days before. We've come down from, even during regular market, from 72 all the way down to 39, 38 and change. The low of this bar is actually 42, maybe this bar here, 37.66. So we've come down to that low and we're playing around in this range. If this is a Wyckoff accumulation, buying climax, automatic rally, the jump the creek line, we haven't jumped the creek yet. It pretended here, right? Or you can say, well, the jump the creek line should be drawn here. that's also acceptable. It's how you view the market and draw it. I just draw it here for the most touches on my 15-minute chart, and we had this pretend jump the creek, but what we did not have is hold that line to go back up. We did not have that move, so it's not jump the creek yet, so price is continuing to drive down. So when we have a real jump the creek, it's going to be one of these, or it could be one of these. It's just not closing below that line. If it's a distribution, this is UTAD, and then what's going to happen is price is going to do this, price is going to do this and give us our wonderful entry. I don't know where that entry is going to be, because when we break structure we will know, but as soon as it gets south of 30, I'm going to start accumulating positions. And you know, if I miss it, if it goes to 30, I get some and reverses, that's fine. The idea is 30 and below. Really, technically 32 and below, I'm okay. I'm going to start to buy some positions at 32, at 30 a little bit more, below 28 a lot more, and if we get to the 25 area, I'm going to complete my full load, and then expect that explosive move. And options don't affect the squeeze. So if you load up here and price comes back up here and you have made 5,000% return, you know, 2,000, 3,000, 4,000% return, feel free to start taking off some of your positions, because you've loaded up. That's a goal, right? Is to load up, and as price moves, not small moves, mind you, not small moves. If you're in it for that short squeeze, let's take it, you know, big moves, capture your big gains in options and wait for your stocks to drive up to, I don't know, 300, 1,000, 10,000. I have no idea. There's mentions of every kinds of numbers. I don't want to throw in numbers. All I want to suggest is let us just wait and see what happens. If you're comfortable adding on positions right here, that's also perfectly acceptable. If you want to keep adding on positions here, right, don't chase, but if you want to keep adding on positions as it's going down, you add position, you add position, you add position, you add position, it finally shoots up. That's also acceptable. I'm just giving you different ideas on how to look at this market, different ideas on why you need to be patient for the squeeze to take place. It could happen anytime. It can start that explosive move anytime, but for it to happen, we as retailers need to stop selling our stock, our shares. We need to trade options for the gains. If you want to take the gains from this low to this high, play options. Keep your stocks, play options. And then again, when price collapses, you wait and then you enter again. You can keep doing that. You can get put options, capture from here to here, from here to here. So it's going to keep bouncing around. And then the full explosion happens. You take care of your stocks. So for now, my suggestion is, if you really want to play the up and down, use options. If you don't know what to do with options, leave a comment below and I'll guide you through it. Again, not recommending to buy or sell anything. I'm just saying this is how I would play it. And if you want to learn options, I have a video on options, and I can also give you additional guidance. So this is how AMC is looking like. So everyone, take care for now. I'll see you in the next video. Let's see what AMC does. But my next video is on the broader market in just a little bit. All right, take care for now.